While Kenyan consumers brave turbulence in the business environment to increase their uptake, can you believe it, of new loans, leaving a silver lining around the dark clouds that have been gathering over this economy, with inflation rising to 15.5% in the last month. Joining us now from Nairobi to discuss the central bank's latest financial services industry data is Edwin Wanjawa, CEO of the Consumer Federation of Kenya. Edwin, thanks so much for your time. Higher costs of living, inflation is rising, but Kenyans are borrowing. Explain that to us.
Well, the cost of living has been increasing for the last 9 months. The last statistics showed that the cost had increased from June, which was 14.95%, to 15.5% in July. And the fears are that inflation is going to continue to increase. And it has had a big impact on the cost of living and on the cost of food.
All right. Now, what impact does that have on the financial industry in general? Because banks have now increased their loan books, and their half-year results demonstrated very good performance. But there's now fear that we're going to see non-performing loans increasing. Certainly, the portfolio has increased by 3.9%, and there's a fear that there's going to be a default. And going forward, people may not be able to borrow, and yet their costs of living and prices are changing around them, and they may need a little bit of that safety net.
Well, that is true, but maybe a little background will help. For instance, in the Kenyan banking market, if you went to a bank and took a loan, and you're a favored customer, they'll charge you 13.96% as interest. If you are saving an equal amount of money in that same bank, they'll pay you an interest of 1.37%. So therefore, the problem here is that the banking sector in Kenya, I think, has failed to play its role of providing affordable capital to Kenyans. So it is true that the banks have been making profits, but I'm afraid that those profits, if they continue to lock out most consumers, those profits will not be sustainable. In fact, a large number of Kenyan consumers, many professionals, actually don't do business with the banks. They do business with what we call SACCOs. Yeah. Small cooperative societies.
Yeah. What about business and how business could respond to the changing environment? I mean, ultimately, business have been able to honor their debts and loans to the banks. But if the environment gets more constrained, we may see business having to shed jobs, having to slash wages just in order to cope. What's your view?
My view is that businesses have been able to cope up to now because what they have simply done is to pass the cost of increased business to the consumers. Unfortunately, what that is going to do is that we are going to have a shrinking consumer market. And eventually, the profits they're making now, they will not be able to make. My thinking would be that what businesses should do would be to share this increased cost with the consumers rather than simply pass it over to them. Because if they do that, then their business will not be sustainable.
Rising interest rates, we've seen that with the raising of the CBR by 25 basis points. We are expecting further monetary tightening on the part of the central bank. We've seen the shilling weakening significantly, and that's impacting on importers. And also, of course, with the prices changing and shifting around. How's that going to impact on people in their day-to-day? Because I don't hear of wage increases in the midst of this inflation problem.
Well, the impact will be in several ways. One, you must appreciate that there are business people who benefit from increased inflation or increased interest rates. For instance, people in the tourism industry, if a tourist came to Nairobi or in Kenya last year at this time, and they charged him $50, let's say for a service, if today they still charge that same tourist $50, they'll increase their profits by 14 shillings. So it is true that there are businesses that are going to make profits because of the increased inflation and high interest rates. I don't know if you're aware, but Nairobi today, apparently between January and June, actually the cost of living in Nairobi is cheaper not for the Kenyan resident, but for the outsider. Because if you're coming in with the dollars or coming in with the pounds, actually you're paying your services at a lower rate. So those businesses will increase. But in the long term, many businesses are going to suffer, and unfortunately, we may have job cuts. Profits will go down. But we are hoping that Kenya is a resilient economy, that hopefully rains will come on time. Some places are now harvesting, and that things will improve.